We've got a fascinating story to kick off our show, as the US dollar has taken a significant hit against the Japanese yen after a rare joint intervention by the US and Japanese governments in the currency markets. According to reports, the dollar was trading above 163 yen just last week, reaching 40-year highs, but has since weakened sharply after US President Donald Trump and Japan's finance minister confirmed that both countries had intervened in the markets. This move is seen as a signal of friendship and cooperation between the two nations, with the US aiming to help its key ally Japan by reducing the yen's weakening trend. The intervention appears to have had a more durable impact than earlier cases this year, and some analysts believe the yen may have a slightly stronger path for the rest of the year. However, the underlying factors contributing to the yen's long-term weakness remain, including Japan's massive government debt and the Bank of Japan's slow pace in raising interest rates. The US, on the other hand, is trying to balance its own economic interests, as a weaker dollar makes American-made goods more competitive in the global market, potentially boosting exports to Japan. But with the Federal Reserve's current rate of 3.5% to 3.75% and the Bank of Japan's benchmark rate at just 1%, the yield differential remains significant, which could continue to impact currency markets. As we explore this story further, it's essential to consider the broader implications for global trade, economic stability, and the complex relationships between nations. We'll be keeping a close eye on developments in the currency markets and their potential effects on stocks, bonds, and other financial instruments. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We are exploring the world of emerging markets and the pressures they are facing. Oil prices have risen above $86 a barrel, causing currencies of oil-importing Asian nations to fall. The Philippine peso, Thai baht, Indonesian rupiah, and Korean won are among those feeling the pinch. This has significant implications for trade and economic growth in the region. Meanwhile, central banks in emerging markets seem reluctant to hike interest rates, despite high U.S. yields and rising oil prices. UBS Group AG strategists believe that unchanged Fed rates into year-end could be necessary for EMFX performance to broaden in the coming months. We're also seeing gold prices holding near $4,000 an ounce, which is supporting the South African rand. However, the rise in oil is capping gains. The Hungarian forint has steadied versus the euro after earlier gains. As investors monitor central bank meetings, Brazil is expected to deliver another interest rate cut, while India is likely to keep policy steady. But with energy prices elevated, there's a growing risk of more active central bank policy tightening by September or October. Emerging stocks are also under pressure, weighed down by declines in Taiwan's chipmaker TSMC. However, Korean stocks have recouped some losses after Monday's 5% slide. It's essential to keep an eye on company fundamentals as the market overhang of crowded investor positioning dissipates. In conclusion, emerging markets are navigating complex challenges, from oil price volatility to central bank decisions. As we continue to monitor these developments, it's crucial to stay informed and adapt to changing market conditions. Welcome back to the Riskwiser Zone. We're closing out today's show with a look at some major market milestones. Amazon has just hit a $3 trillion market value, becoming only the fifth company to ever reach this milestone. This achievement comes after the company's shares rose as much as 5.3% following second quarter earnings that showed accelerating cloud computing revenue. Amazon joins an exclusive group of companies, including NVIDIA, Alphabet, Microsoft, and Apple, that have reached this size. It's worth noting that Amazon had been experiencing a sell-off for much of the last 3 months, as investors soured on shares of companies committed to spending billions on artificial intelligence. However, those fears were eased after the firm reported a significant jump in revenue for its Amazon Web Services unit. The market capitalization milestone is a significant one, with Amazon reaching $3 trillion in just over 2 years after first hitting $2 trillion in June 2024. This growth is faster than the more than 6 years it took for the company to reach $1 trillion in late 2018. Wall Street remains upbeat on Amazon's long-term prospects, with the average analyst price target calling for the stock to rise about 14% over the next year. It's essential to consider the broader market context and potential risks when evaluating Amazon's performance. As investors, it's crucial to remain informed and adapt to changing market conditions. We'll continue to monitor these developments and provide analysis on future episodes of the Riskwiser Zone. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.